Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me is Christopher Gannatti. He's the head of research in Europe with WisdomTree. We're going to take a look at the popularity of cloud computing and just how your portfolio can get exposure to it. Chris, it's great to have you with me. Thanks so much for joining.
Absolutely. It's a pleasure to be here today.
All right, and let's get right into it. Why is cloud computing suddenly getting a lot of attention in 2020?
Well, as we look at the space, and it's funny that we mentioned 2020, NetSuite is an example of a company that was founded in 1998 and Salesforce was launched in 1999. So cloud computing, even though it might be getting a lot of attention now, is coming up on a little bit more than 20 years of being in the market. You have essentially today 86 privately held companies, unicorns valued over $1 billion. And that's not to mention the fact of COVID-19. I know within some of the charts that we'll be referencing on page 2, what we have is a list of some of the fastest growing apps and tools by unique users. And we're recording this on Zoom. Many people may not have heard of Zoom. And then now with COVID-19 and needing to work from home and stay in contact and do all sorts of other things, Zoom has become central to working in this type of pandemic. And as you look down the list, you see many other recognizable companies. I know Smartsheet is something that we even use at WisdomTree to help keep track of a lot of complicated projects. So it's really an amazing thing that these cloud companies, it's almost as though they see a problem, they see a need that consumers and businesses need to solve. And you don't even need to understand what cloud computing is. You just go in, you start using the app, it solves the problem that you're looking for, and you go on your way. And it's by virtue of that simplicity, or at least seeming simplicity, that we think the space has grown as much as it has.
Do you think this is a brief spike of interest driven by the fact that so many people are working from home, or do you think there's a longer megatrend at play here?
So when we look at the third picture within the slides that we're referring to today, it really showcases what we think of as a much longer trend. And as we mentioned, there were those very well-known companies that started in the late 90s and early 2000s. And it was absolutely true that for a number of years, cloud might have been something that was discussed, but it wasn't necessarily widely used and widely adopted. But in the past few years, we've been seeing more and more adoption. It's true that today, more than 90% of businesses, enterprises out there, essentially use at least one cloud-based software package. And what we see on the page is by the time you're getting to 2024 and 2025, it's forecast that almost half, or roughly half, of the software market will be cloud-based. And when you get to 2030, it's forecast that more than 80% of the enterprise software space will be cloud-based. There are a lot of reasons. There's convenience, there's security, there's the fact that you don't need to maintain servers and server rooms and everything that goes along with that. And this convenience, and in many cases lower cost, to allow businesses to really do what they have to do anyway, even outside of any pandemic or work from home orders, it's something that was growing significantly. And what we see the pandemic impacting is this idea of almost a work from anywhere mentality. There were businesses that were sort of in that transition to help their employees be able to work from home more flexibly. And now obviously it had to be done so much faster. And we definitely see articles getting written almost every day about how many companies may not necessarily go back to 100% on-premises workforce. So it's been very interesting.
Yeah, COVID-19 certainly has accelerated trends that were in place prior to the pandemic. Do you really need a pure play approach, or can investors get the exposure they need from general tech-focused benchmarks?
So on the fourth page within the slides that we're referring to today, it's an interesting illustration. And if someone were to come to me and they said, Chris, do you think there is cloud exposure within, say, the NASDAQ 100, which is a great index? It's one of the most well-known and widely followed tech-focused indices out there. And it's absolutely true that in the NASDAQ 100, there is some cloud exposure. So the key question then becomes, okay, if it's already in the NASDAQ 100, what's the difference by trying to think of a more specific index or a more specific strategy? And what we see on the page is the BVP NASDAQ Emerging Cloud Index is such a specific strategy. Essentially, every company in that index needs to generate essentially more than 50% of revenue from business-oriented cloud software being sold to its customers. And look at those sales growth. That's a weighted average sales growth figure over the last year, and it's above 35%, which is a big difference from what people are getting within the NASDAQ 100. It's absolutely true that when people hear about Amazon Web Services and Microsoft Azure, those sort of sub-businesses within the broader Microsoft and Amazon are growing exceptionally fast. Some cases in the 30 to 35% range, some cases much faster than that. But they're parts of much, much larger, essentially in some cases, trillion-dollar plus market cap companies. Whereas what's in the BVP NASDAQ Emerging Cloud Index are in many cases smaller, newer companies that only focus on cloud, and that's essentially their main business.
All right, so as we look to wrap up here, what are some of your 2020 thoughts or outlook regarding cloud across sectors and different geographies that you're looking at?
So when we go to the fifth and final page of the slides, we see essentially 6 forecasts or 6 predictions. And it's interesting to note, for example, the future of work will be remote. I think that's pretty obvious and something that's on everyone's minds today. It's not even a question of if, it's a question of what that looks like and what it ultimately means. To us, one of the most interesting ones, especially being based over in London and seeing things like GDPR and how the European markets deal with data and deal with privacy issues, is the idea of privacy debt being the new key focus. It's estimated that every data breach in 2020 could cost firms up to 150 million. And over the course of a given year, data breaches cost firms more than $2 trillion US. That's a rough estimate, but we all know how important security, cybersecurity, and storage of data absolutely is. And cloud companies can really come in and fill the breach in that particular space.
All right, Chris, thank you so much for joining us on Trade Talks. Thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.